Netflix, what a business model. Started out posting DVDs. I mean, who's even heard of those these days? And now it's the world's biggest streaming service. But it has been a dreadful week for Netflix.
They've lost 50 billion off their share price, 50 billion off their market capitalization. Now that's a bad week in anybody's books.
And if you look at what happened, it was a relatively trivial drop in their number of subscribers. 200,000 subscribers they lost. So why would that have such a big impact on the share price?
Because I don't think the market was expecting that fall to have taken place. And the market doesn't like surprises.
Yeah, unexpected bad news. Market forecasting growth and actually subscriber numbers contract. Small drop this quarter, but what's it going to be like going forward? And that's the worry.
And the markets value businesses on the forward projection. They don't simply add up the assets on the balance sheet and say that's what the business is worth. That's far too a simplistic approach to be taking.
But this series is not about share prices and company values. It's about the really interesting stuff, the accounting and particularly the auditing. So, accounting at Netflix. Well, revenue's got to be interesting, hasn't it, Tom?
Well, it's a nice simple thing to explain because Netflix is a subscription model. Now, the principle about recognising revenue is you recognise revenue, sales, when the performance obligation is fulfilled. So Ben, you're a subscriber of Netflix. How much do you pay a month?
Well, I actually had to look it up as part of my research for this because I'm their dream subscriber. I just pay and forget about it. But I pay £11 a month and I pay that in the month and I receive my services, the performance obligation of delivering Netflix, The Crown, Bridgerton to my partner, to our house is delivered in that month. And it's not like I'm tied in for a year or 3 years. If I want to cancel, I can do so immediately. They turn off the taps.
So revenue is recognised when the performance obligation is fulfilled. And for Netflix, the accounting for that is very, very straightforward. And I guess the auditing is as well, Ben?
Yeah, and so you would look at the internal controls. You do a lot of controls work around verifying that their subscriber number is correct. And you do high-level analytical procedures. So looking at the number of subscribers that you're comfortable with, times by the subscription price. Does that come out to look like the revenue figure? In fact, it'd be pretty easy to audit this. So revenue, not that interesting. What about on their statement of financial position? Anything exciting there?
Yeah, on their balance sheet, on the statement of financial position, one asset stood out, representing 75% of the assets that they recognise. What do you think that was, Ben?
I'm going to say, as I already know the answer, but I've got to pretend, could it be intangible assets, Tom?
Absolutely, absolutely. So what's Netflix famous for? Breaking Bad, The Crown, series like that. And those development of those programs and the purchase of those programs are recognised as intangible assets on the balance sheet.
Okay, so they do a mix of buying in content from another production house of some sort.
Credit cash, debit asset, very straightforward.
And that's pretty straightforward because you're buying an identifiable asset, you know how much you've paid for it, pretty easy to account for and to audit. You know, look at how much they've paid, look at the contract, bank statements, contract, pretty easy. What about the stuff they make in-house?
Well, that's development, isn't it? If they're in a research phase and they're not sure whether they're going to be making the program, that research expenditure has to be written off. But if we take something like The Crown, how much do you think it costs per edition to make The Crown? I think that's the most expensive one that there has been.
Yeah, it's a whopper, isn't it? So The Crown is $13 million per episode.
And I think most of that is paid to Olivia Colman.
Hold on, there are some pretty amazing costumes in The Crown. Some wonderful sets, but yeah, you're right. It's got to be mainly wages, isn't it? Tobias Menzies doesn't come cheap.
And wages, traditionally, when you think about wages, are an expense. So when you are paying wages as a normal business, as a typical business, that's going straight against the profit and loss account, and that is reducing profit and is regarded as an expense.
Yeah. So Tom, you worked for ages at what? Kaplan, KPMG. Your wages would have just been an expense against profit.
Straight through the P&L, absolutely. But when you're paying Olivia Colman as part of a production to make a television program, What Netflix are creating is their own intellectual property, their own IP. And it's identifiable, it's separable, it's going to create future economic benefits. And for those reasons, they're able to capitalize it, to recognize it as an asset.
Okay, so something like the Crown, which is an established program, it's pretty easy to go, yeah, there's economic benefits that are going to come from Series 5 of the Crown because Series 1 to 4 was successful. We pretty much know it's going to be a winner. Okay, we can capitalise it. What about something that's a bit more speculative, a pilot for a new program?
I think there's some judgment there, isn't there? Because during the research phase, if you're not certain there's going to be future economic benefit, you've got to write it off. You can't capitalise the costs until it's probable there's going to be that future economic benefit. And that's a judgment that is required.
Yeah. And so on the audit perspective, you would be looking at what they are capitalising and going, right, well, what are these programs actually for? Has this series been signed off? Is there a marketing budget in place, a plan in place to launch this new series? Because if it hasn't been commissioned or signed off for a full series, and there isn't a plan in place to launch it, then it's probably research expenditure rather than having to be capitalised or should be capitalised as development expenditure. And that's going to be some judgment calls there for the auditor, or judgment call for management. The auditor is going to have to look for evidence to support management's assessment.
And I think there's another judgment issue that the auditor's really got to have a look at, which is to do with the amortisation, which is to do with the systematic write-off. The reason that we've capitalised the asset is because those costs can be matched against future benefits, against effectively future revenues.
Yeah, and it's a judgment call as to how long that period's going to be. How long is a certain programme going to generate future economic benefit for the business?
Breaking Bad?
Yeah, so great example. So I actually got my Netflix subscription because I watched an episode of Breaking Bad on a flight and loved it, went home and was like, I've got to watch the rest of this series, and I took out a Netflix subscription.
It's a hook, isn't it?
Yeah,
it's a real hook.
It totally is. But that episode from Series 1 of Breaking Bad, when I watched it, it was probably 7 or 8 years old, that programme at that point. But it hooked me in. It brought a future economic benefit to Netflix based on that old asset that they had.
Well, looking at the financial statements, it appears to me that what Netflix have is a policy of writing off their intangible assets over 3 years. So effectively, the original costs incurred in making Breaking Bad have been fully expensed, and Breaking Bad could be described as an off-balance sheet asset.
Now that sounds dodgy. Are you going, ooh, Heckle's raised a little bit, off-balance sheet accounting? I know that's something that's not supposed to go on. But it's prudence, isn't it? It's prudence. You can't say that Breaking Bad is going to have a 10, 20... Some shows will have a 10, 20-year economic life, but that's surely the rarity, isn't it?
Yeah, and the majority of the benefit from Breaking Bad has already been consumed, has already occurred, and therefore it is appropriate that it's severely written down, if not totally written off.
Should we finish with a bit of an ethical dilemma, Tom? A hypothetical ethical dilemma. So Netflix identifies its biggest risk as subscribers sharing their logins with their friends and family. Hypothetically, if a member of your family had a Netflix subscription, Tom, and shared it with another member of their family, would that be morally wrong?
Oh, Ben, what are you doing with this? I thought we said we weren't going to do this.
Okay, well, so we're going to end on that note. Netflix, done. I'm off to watch Bridgerton.
And I'm off to watch a copy of The Crown. A copy of The Crown, an edition of The Crown.